Did you know that the majority of professional traders use technical analysis as their primary tool for predicting market movements? Welcome to our beginner's guide on mastering the art of technical analysis. Whether you're looking to understand the stock market, cryptocurrencies, or any other trading platform, you're in the right place. So, what is technical analysis? Simply put, it's the study of past market data, primarily price and volume, to forecast future price movements. But why should you care about it? Understanding technical analysis could significantly improve your trading decisions, making you more informed and potentially more profitable. Let's break down the key components of technical analysis. Firstly, let's talk about price charts. Price charts are your best friends in technical analysis. They come in various forms like line charts, bar charts, and the most popular, candlestick charts. Each candlestick provides information about the opening, high, low, and closing prices of a given time period. Moving on to trend lines. Trend lines are simple lines drawn on charts to connect price points, representing support and resistance levels. Identifying these levels can help predict the future movement of prices. Now, let's discuss indicators. There are countless indicators out there, but as a beginner, focus on the basics: moving averages, RSI, relative strength index, and MACD, moving average convergence divergence. Moving averages help smooth out price data to identify the trend direction. RSI measures the speed and change of price movements, indicating overbought or oversold conditions. MACD, on the other hand, helps identify trend reversals by comparing two moving averages. Here's an interesting story to illustrate the power of technical analysis. A novice trader started using these simple indicators and began to notice patterns. By following the trends indicated by these tools, they were able to make more informed trades and saw a significant improvement in their trading performance. Charts patterns are also a crucial part of technical analysis. Familiarize yourself with patterns like head and shoulders, double tops and bottoms, and triangles. These patterns can help predict future price movements based on historical data. Now, let's address a common question. Can technical analysis be used alone for making trading decisions? While it's powerful, combining it with fundamental analysis provides a more holistic view of the market. Think of technical analysis as the how and fundamental analysis as the why behind price movements. Remember, practice is key. Start by opening a demo trading account and apply these concepts without the risk of losing real money. There's no better way to learn than by doing. We've covered the basics of technical analysis today, but this is just the start of your journey. Keep exploring, learning, and practicing. Don't forget to like, share, and comment below with your thoughts or questions about technical analysis. Remember, the more you engage with these concepts, the more proficient you'll become. Thank you for watching, and see you in the next video where we'll dive deeper into advanced technical analysis tools and strategies.